Hey, everyone. Welcome back to the TQQQ Challenge channel. Today, we're delving into two key aspects. 1. The annual returns of TQQQ from 2010 to 2023, and 2. Calculating the future value of your investment in TQQQ in 30 years in 2053. It's going to be an exciting journey, so let's dive right in. Let's delve into the yearly returns of TQQQ and analyze its performance over the years. In 2010, TQQQ kicked off with an impressive return of 89.2%, laying a robust foundation for growth. This outstanding performance was driven by the recovery from the global financial crisis of 2008-2009, as markets rebounded vigorously. Unfortunately, 2011 brought a negative return of -10.4%, underscoring the inherent volatility of the market. This downturn could be attributed to various factors, including concerns over the European debt crisis and geopolitical tensions. However, TQQQ bounced back in 2012 with a solid 44.2% return, demonstrating resilience and determination. This recovery was fueled by improving economic conditions and renewed investor confidence, leading to a bullish market sentiment. 2013 was a remarkable year for TQQQ, soaring to an astonishing 123.6% return, showcasing its potential for high growth. This remarkable performance was driven by robust corporate earnings, accommodative monetary policy, and technological innovation, particularly in the tech sector. Continuing the upward trajectory, TQQQ delivered consistent returns in 2014, 59.3%, 2015, 15.6%, and 2016, 19.3%, demonstrating its long-term growth potential. Despite some fluctuations, TQQQ remained on a positive trajectory, benefiting from strong market fundamentals and favorable economic conditions. 2017 stood out as a stellar year for TQQQ, with a remarkable return of 114.1%, solidifying its position as a high-growth investment option. This exceptional performance was driven by a combination of factors, including robust corporate earnings, tax cuts, and increased investor optimism following the election of a business-friendly administration. Unfortunately, 2018 brought challenges, with TQQQ experiencing a negative return of -21%, underscoring the importance of understanding and managing risk. This downturn was fueled by concerns over rising interest rates, trade tensions between the US and China, and fears of an economic slowdown. However, TQQQ quickly rebounded in 2019 with an impressive 149% return, followed by strong performances in 2020, 104.9%, and 2021, 80.7%, reaffirming its potential for substantial gains. These rebounds were fueled by factors such as accommodative monetary policy, fiscal stimulus measures, and the rapid adoption of technology-driven solutions. But hold your breath, 2022 hit hard with a -79% return. And then came 2023, the year of redemption. TQQQ skyrocketed by a mind-melting 191%. Now, let's shift our focus to the future value of investing in TQQQ consistently over time. If TQQQ delivers a similar average annual return since its inception in 2010, how much value would it have 30 years later in December 2053? Investing consistently over time can lead to substantial growth, especially when compounded. Let's calculate the future value of your investment in TQQQ if you contribute $1,000 every month for the next 30 years. First, let's calculate the adjusted growth rate. Original 10-year CAGR, 38.99%. Expense ratio, 0.95%. Adjusted growth rate, 38.99% minus 0.95% equals 38.04%. Using the adjusted growth rate, the future value of your investment would be approximately $10,702,000 after 30 years of consistent monthly contributions to TQQQ, considering the expense ratio. Remember that market conditions can fluctuate, and this calculation assumes constant returns. However, disciplined investing over time can still lead to significant wealth accumulation. Now, let's delve deeper into TQQQ's performance and the factors contributing to its growth and volatility over the years. TQQQ's performance has been influenced by several key factors, including 1. Nasdaq 100 Index. TQQQ seeks to provide 3 times the daily performance of the Nasdaq 100 Index, which comprises the 100 largest non-financial companies listed on the Nasdaq stock market. The index includes technology giants like Apple, Amazon, Microsoft, and Alphabet, Google, among others. The Nasdaq 100 has historically been known for its strong growth potential, particularly in the technology sector. 2. Leveraged ETF structure. As a leveraged ETF, TQQQ aims to magnify the returns of its underlying index on a daily basis. This means that when the Nasdaq 100 index goes up, TQQQ tends to rise by 3 times the amount, and vice versa. While this can amplify returns in a bull market, it also increases the fund's sensitivity to market fluctuations and volatility. 3. Market conditions. TQQQ's performance is heavily influenced by broader market conditions, including economic trends, geopolitical events, interest rates, and investor sentiment. Bull markets tend to benefit TQQQ, driving prices higher, while bear markets can lead to significant losses due to the fund's triple leverage. 4. Expense ratio. It's important to consider the expense ratio when investing in TQQQ, which currently stands at 0.95%. While this fee may seem relatively low, it can have a significant impact on long-term returns, especially when compounded over many years. Given TQQQ's historical performance and the factors affecting its returns, what is the best investment strategy for maximizing gains while managing risk? 1. Long-term perspective. TQQQ is best suited for investors with a long-term investment horizon who can withstand short-term volatility. While the fund has shown impressive returns over time, it has also experienced significant fluctuations, requiring patience and discipline. 2. Dollar cost averaging. One strategy for mitigating risk is dollar cost averaging, where investors contribute a fixed amount of money to TQQQ at regular intervals, regardless of market conditions. This approach can help smooth out the impact of market volatility and potentially lower the average cost per share over time. 3. Risk management. It's essential to have a clear risk management strategy when investing in TQQQ, given its triple leverage and sensitivity to market fluctuations. This may include setting stop-loss orders, diversifying your portfolio, and maintaining a long-term perspective. I believe that TQQQ can indeed be a sound long-term investment if we adhere to 3 fundamental rules. 1. Monthly investment. Commit to buying $1,000 of TQQQ every month for a span of 30 years. 2. No sales. Resist the temptation to sell even a single share of TQQQ throughout the entire 30-year period. 3. No margin. Strictly avoid borrowing money and steer clear of margin trading. This third rule is particularly crucial, as margin trading could lead to forced selling during market downturns, resulting in significant losses. Consistently investing in TQQQ over time offers several benefits. Firstly, it allows you to capitalize on the power of compounding, where your returns generate additional returns over time. Secondly, by adhering to a disciplined investment strategy, you avoid the pitfalls of emotional decision-making that often lead to selling during market downturns. Lastly, with TQQQ's historical performance showcasing both volatility and growth, a long-term investment approach provides the opportunity to ride out market fluctuations and benefit from overall upward trends. And that wraps up our breakdown of TQQQ's annual returns from 2010 to 2023, along with a glimpse into its potential future value. I hope you found this analysis insightful and valuable for your investment journey. Don't forget to like this video, subscribe to the channel, and hit the notification bell for more updates. Until next time, happy investing, and I'll see you in the next video.